Good afternoon, traders. Joe Baker with Trade Pilot. I would like to go over a little bit about market symmetry and market structure and how we get an idea of what I would consider our big picture for the day. Even though this is still a 5-minute chart, it gives us the numbers that we need. It gives us the prior night's Globex high, Globex low. On the open, it actually gives us range expansion targets based off of range expansions between Globex, range expansions between prior days. These are all, very difficult to calculate on their own or have on a piece of paper next to you. So we actually have these printed right on our screen. I know you probably can't see this, because YouTube steps all over these videos and the clarity is very tough. But as you know, I am going to be doing full-size videos and putting them on the web page for you in the future. That'll be a lot longer than 10 minutes explaining this. So what here had happened in the morning, obviously, we had the rate cut and we had the market going up and down and really shooting all over the place. As the day progresses with this chart, we actually get more information, so we actually should trade better throughout the day. I know what happens a lot. People get lethargic, they get tired, stressed out, so they get a little sloppy towards the latter part of the day. What this does, it actually increases your awareness of what the market's doing. And obviously we have a few other things we look for. We look for, symmetrical wedges. We always, those are always great high probability trades. We look for, pennants, bear flags, bull flags, Gartley patterns, things of that nature. And right here is a Gartley pattern that had fired off today. And I said, this to me shows a bullish sign. Now, what would negate this, okay, and make this be a failure would be a takeout, okay, of my 971. Knowing that because it's right there, I can see it, there's a line drawn, not a big deal. So I know as long as we don't take out 971, I know the market's actually in good shape at this point in time. This is right around the 12:30 time frame. Actually, we do actually have a time zone, a trade time zone at that time as well. What is 105? 1005.50. 1005.50, I don't know if you can see this or not, but that's the closing of yesterday. Okay, that's the closing of yesterday. 105.50, 105 and a quarter, something of that nature. Okay, depending on what data service you use. That is considered what we go by as settlement, and we know that that's going to be an area that's going to be an area of support, resistance. That's where the market's going to want to go. Above it, we're very bullish. Below it, we're bearish, and that's, a lot of times that can be, my line in the sand, plus or minus a few points, given the range of the day. So, this being said, when this Gartley fired, I said we have a good probability, I typed in the room, that we could head back up to this 105 area. Okay, now you can see we got to the 105 area, we double topped here, and we fell right back down to about 996, 995 area, and then came up, went sideways across it, and then all we really did is at the 1026, as you see, this says our first hour high, and this draws a big line across. Okay, so now I know what my first hour high is all day long. I got this big, huge target, staring at me. And all we really did, if you understand what, as far as market structure goes, we opened, we made a first hour high, we came back down, we made a first hour low, we came back to the first hour high, we came back, we didn't take out this 105, we came back to take it out again, we couldn't, we failed, so what did we do? We went back to the first hour low. So really, I would consider that a range day, although the range was, 400 points, it was back and forth, it was very confusing, but as it was playing out, you can kind of get an idea of what the market's doing. Okay, so obviously, for those of you that don't have this indicator, you don't have TradeStation, I can tell you what to jot down. You jot down your 15-minute high, your 15-minute low. Okay, one thing that we always do is we also look for the open range average. I don't know if you have that accessibility, but this does give us the open range average. Okay, so it gives us the average of the open range. That's the average of the first 15. Okay, now if we're above our open range average of the first 15, we're bullish. If we're below, we're bearish. Okay, how much time do we spend below the 5-minute average or the open range average versus the higher and the lower part. That gives us a bias. Okay, I always talk about having a bias is dangerous in trading, but having a technical bias can definitely help you because it makes you look for certain signals, either bearish or bullish, when to set up. Okay, the Gartley pattern, this is a bullish Gartley pattern. This fired off on its own automatically, and that got me to the point of thinking, geez, we have a good chance of coming back up and retesting this settlement from the prior night, and then possibly the 1 hour high. Now, getting above the 1 hour high, that would tell me that we have a real high probability of closing much, much higher. Now, obviously, we didn't do that, and that's why the market decided to sell off into the close basically right to the 1 hour low. So it was a very, though, like I'm trying to say, the range itself was ungodly and probably tossed many of you around. But to be honest with you, it was what I would consider a controlled chaos. If you see, we've got our 1 hour low, we've got our 1 hour high, we've got our Globex session here, we've got our Globex session there. It was all right here. It's all here. It was an inside day is what I consider, just an inside within that 1 hour range. So as you all know, we do try to make a high and a low within the first hour of the day. And we break out or break down below that, that's when we get the initial trend going higher or much lower. Unfortunately, we have a very high volatility market, so these ranges on the open can be 30 points, which is normally not. Usually they're typically 10 or 12, and then we go forward from there. So it's a little different, but I'll be doing this again. I'll use the same chart as these days go because I'm not doing the levels again on here anymore because I'm putting out all three markets. Again, you can all go to my blog, sign up for them. I say this every night. They're free of charge. Just sign up. They'll come in your email. They went out hours ago, and that gives you all the levels for the NASDAQ, the Dow, the S&P, gives you the breakout levels, gives you the line of sand, and so forth and so on. But I'll be continuing to show you how this chart can help you every single day if you just watch your first hour high, your first hour low, your 15-minute open range. And like I said, I don't know if you have the ability to chart on whatever platform you guys are using, but we use for charting, we use TradeStation, but we do have an open range average, okay? And that basically plants our bias for the day, and we know once one level's taken out, we have a higher probability of getting to the next level. All right, guys, that's all it for the night. I hope you guys are trading carefully. Hopefully we'll find some sort of a bottom in this market. Remember, right now we're going through heavy liquidation periods. A lot of these hedge funds were heavily leveraged, trying to, think about it, 9,000 hedge funds all chasing the same dollar. So, they had to leverage up. Now they're deleveraging, and now they're deflating, and they're having to sell all those assets. So things are being sold that shouldn't have to be sold. So there are a lot of value out there, and right now the market is in, it's in the emotional stage of just sell it, get me out at any cost, and you're seeing these massive liquidations of these massive funds. So obviously valuations, and there's just a tremendous amount of deals out there. If you are trying to build a portfolio, be very careful. I would not commit everything, but if you did stay out, like I've been saying, in cash for so long, we might have another 20% to the downside, but sticking your foot in 10 to 20% of a position, like say if you wanted to own, ultimately so many hundreds of shares of a stock that you really think would be a good idea, dabbling at 10% a time would not be bad to build a position around these levels, okay? I don't know when we'll get a bottom, but I know we will get one soon because I'm going to run out of numbers, like I said before, in no time if we keep continuing to do this. So, not a bad idea to commit 10 or 20% of your cash at this time to some very good fundamental companies that do have cash, that do not have to access the capital markets. Okay. All right. That being said, I will again do many more videos on the trade setups, less on the levels and the breakouts, due to the fact that they are much bigger ranged now as far as doing all three markets. So please go sign up, get those by email, and I will talk to you guys tomorrow. Take care.